Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of June 26th. Well, for the third week in a row, I will be discussing the Fed because the Fed is so important to market direction. In fact, there's an adage out there, bull markets don't die of old age, but rather they are killed off by the Fed. So 2 weeks ago, we learned that the Fed was pausing rate hikes, but the Fed also suggested they still plan to raise rates 2 more times before year end. Then last week, in testimony in front of Congress, Fed Chairman Jay Powell confirmed all of this information. So the Fed seems pretty hawkish, despite the fact that inflation is showing signs of slowing down. Economic data is starting to weaken. For example, you look at the slide here. This shows the leading economic index, which was released last week. And this continues to fall quickly, suggesting a weakening economy. Historically, the Fed doesn't usually raise rates when the economy is weakening as it is right now. So this week, we get a key data point on Friday, and this will give us further evidence whether or not inflation is slowing down and approaching the Fed's 2% long-term target. If evidence is strong enough, the Fed may not need to raise rates as much as they have indicated. So Friday, we get the PCE deflator. PCE stands for personal consumption expenditure. I don't have time to explain the nuances between the PCE versus the common measure we all talk about, the consumer price index. But keep in mind, the PCE is the Fed's preferred measure of inflation. Also, it's a wider measure of inflation. For example, housing is about 1/3 of CPI, consumer price index, but it's much less in the PCE. So the consensus expects a sharp drop from 0.8% in April to 0.3% in May, and year over year expects a slowing from 4.4% to 3.9%. We do expect this data will be a little bit weaker than expected. We've seen weak survey data. We've seen May industrial production come in weaker than expected. And we saw May retail sales come in mixed, but with a downward trend. Also related to this PCE deflator, this inflation measure, we're also going to get data points to gauge how the consumer is doing. Remember, despite the weakness we've seen in housing and autos and manufacturing, the consumer has proven to be the economy's strength. So we'll get measures of personal income and personal spending also on Friday. The key takeaway, the Fed continues to maintain a hawkish stance, suggesting that they will raise rates 2 more times before year end, or at least keep rates elevated at these currently high levels. Friday gives us additional insight that the Fed's hawkishness may not be justified, and it should offer insight whether the Fed's current hawkishness is even justified. Thank you for listening. For more information, please follow us on Twitter at Cetera IM, and see you next week.